Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. Okay, a really interesting piece of action yesterday. It was a bullish white soldier, but more importantly, it was the market making a foray higher into the important overhead heavy-duty resistance between 115.70 to 120 even. This has highs from 2012, 2013, 2014 and 2017, plus the recent 50% Fibonacci line at 118.01. Prices rose as far as this 50% Fibonacci line, but pulled back to settle just over the August 2013 high at 117.31. Overall, the market continues to move away from what appear to be two descending triangle patterns formed since March, and into what looks like it might be, at least until yesterday, a possible rectangle pattern. Okay, so previously I'd started to look at potential targets on the upside for this recent, previously mentioned descending triangles we'd seen in this market, as well as the double stroke triple bottoms over the same period. Given the move upwards that we've seen, I think I will still do that for now at least. So for the larger March to April descending triangle, I have a potential primary target X1 in the 132.10 area, with a harder to get secondary target X2 in the 147.30 area. For the smaller March to April descending triangle, I have a potential primary target X3 in the 120.5 area, with a harder to get secondary target X4 in the 129.20 area. For the double stroke triple bottom pattern, I have a potential target X5 in the 126.5 area. Okay, I hope you've got all that. We'll see now if they bear fruit. So far today, well, an interesting continuation higher over the 50% Fibonacci line at 118.01 and approaching the 2017 high at 119.19. Spot gold. An indecisive spinning top and possible hammer pattern yesterday. The market dipped down to the combination of the broken upper time, currently at 18.31, of the early March to late April bearish Andrews pitchfork, and the long moving average, currently 18.41. Where it found some pretty good support and thus reverted back upwards. This is further evidence that this bearish Andrews pitchfork is finally getting broken, even though prices have not moved any real distance away from the upper time. I think we'll have to wait and see a little longer to make sure this bearish pitchfork is properly broken. Meanwhile above, we still have the 50% Fibonacci line of the March 2021 to March 2022 move at 18.73. This resistance has been approached this week, but the market has bulked up properly testing it. So far today, well, a fresh attempt higher, but not as yet reaching that overhead 50% Fibonacci line. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Tofpik and ADM Investor Services International Limited. And here comes the final bit.